Good morning, it's Monday the 21st of November and welcome to Atlantic Capital Markets' regular roundup of the key economic highlights coming up over this week. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets. We'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the PMIs in Germany. On Tuesday, we'll hear the latest retail sales in Canada and the Eurozone consumer confidence numbers. Wednesday sees the release of global PMI data, which we'll discuss in more detail in a moment. And it's also interest rate decision day in New Zealand, which we'll also give our own thoughts on shortly. Wednesday also sees the release of durable goods data in the US, the jobless claims in the US and the EIA crude stockpiles. And finally, the always closely watched minutes from the last Fed meeting, which again we'll be giving our thoughts on afterwards. On Thursday, we'll get the latest IFO business climate in Germany and the minutes from the European Central Bank meeting. And finally on Friday, German GDPs and consumer confidence in Germany as well. And the companies that we'll hear trading updates from this week start today with Q3 results from both Dell and Zoom, and we'll be giving our thoughts on these two straight afterwards. Also today we'll hear from the Kingfisher Group. On Tuesday we'll hear from Dollar Tree, HP, CRH, Severn Trent and Homeserve, and also Q3s from Chinese tech giant Baidu, and we'll discuss this afterwards with our own thoughts. We'll also be discussing Halfords, who will be releasing their interim results on Wednesday. Also coming up on Wednesday, we'll also see results from United Utilities, Matthey, Britvic and Pets at Home. And UK retail group Kingfisher will be releasing their Q3s on Thursday, which we'll take a look at towards the end of today's video. Thursday also sees announcements from Intertek and Jet2. And finally on Friday, Cathay Pacific. With the US Thanksgiving holiday on Thursday, volumes could be low in the latter part of the week and trading of course slow. Friday is also a half day in the US. But this week, Wednesday is the busy day to keep an eye on with the Reserve Bank of New Zealand rate decision, PMI data and of course the FOMC minutes due to be released. Black Friday is the unofficial start of the holiday shopping period, so attention is likely to remain on the health of the consumer and of course the retailers. So let's take a look at this week's bigger stories in more detail. US video conferencing company Zoom are due to release Q3 results today. Well, the company's share price has fallen 67%, hitting a 52-week low last month, as the pandemic play continues to unwind. Now, while Zoom continues to add larger businesses, those that are classified as over 10 employees, it has seen the number of smaller companies using its services fall. Although do remember it is still up against pretty tough comparatives. Q3 revenue is expected to rise 4.8% year on year to $1.1 billion, which will be the slowest growth on record. Meanwhile, adjusted earnings per share is expected to fall 24.3% annually to 84 cents. Zoom has said that it aims to improve profitability, although margins remain under pressure due to slow sales growth and increased R&D spending. Well, computer hardware company Dell are also due to release their Q3s today. Dell's share price has dropped over 25% over the past 12 months, falling to a 52-week low in mid-October before bouncing back by around 23% since then. Sales of global personal computers fell by 15% over the year in Q3. Dell's sales fell by 20%. Expectations are for a sharp drop in earnings and revenue. Dell agreed to a $1 billion settlement related to shareholder claims that they were shortchanged by billions on the purchase of EMC. This still requires the court's approval, of course. Wall Street forecasts Q3 revenues of $24.62 billion. That's a 13.3% decline year on year. Adjusted earnings per share expected at $1.61, and that's down 32% year on year. It's also Q3 results day for Chinese tech giant Baidu on Tuesday. Baidu and more broadly Chinese tech stocks have seen high levels of volatility over recent times. Baidu shares are down 33% this year as China's zero COVID restrictions have of course impacted consumer sentiment and business activities. However, the share price is up 17% in the past week after Bai and other Chinese tech stocks reacted positively to the Biden-Xi Jinping meeting at the G20 summit. Expectations are for earnings per share of $2.44, that's up 7% year on year. Meanwhile, revenue expected to fall 4.3% to $4.74 billion. Well, Wednesday is interest rate decision day in New Zealand. Well, New Zealand's central bank was one of the first to tighten interest rates in 2021 and has lifted the benchmark lending rate by 325 basis points. Both inflation and inflation expectations have surprised to the upside since the last MPS in August. With the war against inflation ongoing, the RBNZ could up the ante next week and hike rates by 75 basis points to 4.25%. PMI data for the Eurozone has been steadily declining over the past 4 months as the cost of living crisis, of course, hits consumers, slowing the services sector. Meanwhile, higher energy prices and slowing demand has hurt manufacturing. Business activity data has dropped below 50, the level separating expansion from contraction, and is expected to continue contracting in November, adding to mounting evidence that the Eurozone is heading into a recession. The European Commission forecasts that the Eurozone economy will contract in the current quarter and enter recession in Q1 2023. So do keep an eye this week on the Euro and the DAX. Motoring and cycling products retailer Halfords is in the process of transforming itself towards more vital services and products for motorists, which has made it more resilient to the current slowdown. However, 30% of sales are still from discretionary and bigger ticket items, which are seeing demand slow. Meanwhile, costs are rising. Revenue is forecast to rise 9.1% to £758 million and pre-tax profit expected to drop 34% to £38 million. The full-year profit guidance was lowered to £65 to £75 million in May. Investors will watch to see if this does still remain. The share price trades over 40% lower across the year, but is 24% higher than a month ago. And finally, on Wednesday, the minutes from the latest meeting of the Fed are due to be released. The November meeting saw the Fed raise interest rates by 75 basis points for a fourth straight meeting in a row, taking the rate to 4%. In the press conference following the meeting, Fed Reserve Chair Jerome Powell pushed back against expectations of a dovish pivot. He added that the terminal rate would likely be higher than the 4.5% that the market was expecting. Since then, data has shown that inflation is cooling, fueling bets that the Fed could adopt a slower pace of hikes. Investors will scrutinise the minutes for further evidence that policymakers support a less aggressive stance on rate hikes. UK retailer Kingfisher is due to release Q3 results on Thursday, and investors will be hoping for an improvement on H1 numbers when like-for-like sales fell 4.1% on an annual basis. Gross margin also fell to 36.7%, that's down from 38% a year earlier. The share price dropped 15% but has been steadily clawing back those losses. Revenue is expected to rise 0.6% to £3.27 billion, and like-for-like sales are set to fall for a sixth straight quarter, falling 0.8%, which would mark the smallest decline thanks to improving performance in Screwfix and B&Q in the UK and Brico Dépôt in France. Kingfisher is targeting full-year pre-tax profits of £770 million, but has warned that it could be just £730 million, depending on the economic backdrop. Well, it's almost impossible not to know the fact that this coming Friday is what's been named as Black Friday, when most consumers in the Western world get bombarded by the retail sector with buckets of alleged discounted goods and services. But in fact, it's become a bit of a steroid injection administered by the retail industry to stimulate the consumer into boosting sales in the run-up to the holiday seasons. US retail sales for October were stronger than expected at 1.3% month-on-month after being flat in September. However, some retailers, particularly those focusing on general merchandise, posted disappointing earnings last week as investors assessed the health of the consumer ahead of Black Friday and the holiday season. Meanwhile, other retailers such as Macy's benefited from solid demand from higher income earners. This is a critical time of year for retailers, but with the squeeze on household incomes continuing, fears are rising that consumers will rein in spending. US retailers are expected to remain in focus as early data comes as to how the sector fared on this key shopping day. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from RS Group, National Grid, Imperial Brands, Vodafone, Land Securities and British Land. And in the FTSE 250, we'll hear from diversified energy company Volution Group, JP Morgan Growth and Income, 3i Infrastructure, Witten Investment Trust, Tate & Lyle and Kainos Group. So there you have it. On the markets front, it could be a relatively quiet week, but for the retail industry, it's going to be the annual litmus test of just how the next couple of months may look for them, as the Black Friday sirens try to lure the consumers into parting with their hard-earned cash. With the cost of living crisis creeping its ever-tightening hold, what many people are now classing as extravagant luxury is actually keeping the heating on all evening, rather than upgrading to the next iPhone. Interesting times, but what is certain is that Atlantic Capital Markets will be doing its best to keep the heating on all night for our clients as they face the cold headwinds. So as always, thanks for watching and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and of course our expert opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news. As well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.